welcome. You're watching Buy Now, Sell Now. I'm with you, Kavita Thapliyal. With me is my colleague Ankita Saxena. And next 1 hour is going to be all about your stock-specific questions. We'll be joined by our technical as well as fundamental expert. But until then, all you have to do is just send across your stock-specific queries. The number, our WhatsApp number that's flashing on the screen. All you have to do is just write down the name of the stock, the price at which you bought it, and the timeline till which you want to hold. Whether it's an investment or a trading perspective, we'll get you our experts' answers accordingly. But before that, let's quickly move on and let's look at the markets. Definitely, the market is jittery after the PM Modi's comment and definitely the global developments that we can see around. Broad-based weakness across sectoral indices. We can see a risk of start of domestic markets today being the first trading day of the week, led by heavy selling in consumer durables, realty, media, PSU banks and auto stocks. If we also look at financial and metals, they are also under pressure, reflecting definitely a very cautious sentiment amid global uncertainty. But IT stock showed relative resilience, but we'll just check the current trajectory, while defensive pockets such as healthcare and FMCG limited overall market damage. And that's the consumer durable index that you can see almost more than 3% down, but marginal gains on the IT pack side. Look at also some stock-specific action. Godrej Properties, Anantraj, Lodha from the real estate pack that we are seeing under pressure. And, just an intraday basis, Nifty 50 has also slipped 300 points from its day's high, and Bank Nifty is also almost down 740 points from its day high. And the broader market, mid-cap and small-cap, mid-cap 100 and small-cap 100, both down more than 1% is what we are looking at the markets now. But then more on the markets later. Before that, let's go across to Ankur in conversation with Rajneesh, Karnatak, Managing Director, CEO of Bank of India on the Q4 results.
Yes, Bank of India has posted a record earnings this time. In fact, if you talk about the earnings, the net profit has shown a growth of over 15%. And to discuss about earnings, I have with me Rajneesh, Karnatak, MD and CEO, Bank of India. Mr. Karnatak, welcome to ET Now. My first question to you is, your bottom line seems very good. But as far as the constituents of bottom line, we have seen NII has grown, but other income has declined. So can you throw light on the constituents of the bottom line this time?
Yeah, thank you so much, Ankur, for having me here. So as far as our overall profitability is concerned, it has improved. As you rightly said that we have shown a net profit of more than 10,000 crores with a growth of more than 14%. As far as the quarterly profit is concerned, there also for the first time we have touched the 3,000 crore mark, and it has also grown at around 15%. As far as the this portion of that you are saying with respect to the net interest income is concerned, there also if I say that it has grown by around 3%, there also some improvement is there, but the pressure is with respect to the net interest margins. The net interest margins are under pressure, yes, because we have touched the figure of 2.52. However, having said that, let me clarify that we are having an international book which is nearly 14%, where the NIMs are around 1.2, 1.3%. Right. But our domestic NIMs are around 2.78%. So that is why on a blended global NIM, we stand at around 2.52%. However, having said that, we are very much cognizant of the fact that we have to improve our net interest margins, and we will be doing a lot of strategies to improve the net interest margins in this financial year FY27. As far as the non-interest income is concerned, in the overall profitability, there also, Ankur, we have grown by nearly 10% on a YOY basis. Right. So that has been a good growth which we have shown over the years. And there also, in order to maintain the overall higher profitability for the next financial year, we are strategizing certain things so that the non-interest income grows substantially in this financial year.
Definitely. And now let us discuss each vertical one by one. You mentioned about non-interest income. Fee income has been good. But overall, has there been impact on treasury? Has there been impact due to yields movement?
Yeah, definitely there has been impact due to the treasury yields movement and also the RBI circular on the forex part, which had come. Both had an impact. In spite of that, we were able to grow, as I said, our non-interest income by 10%. So a lot of our processes and other things with respect to wealth management and other things are now fully stabilized, and they are giving us good results. Lot of automation in the processes which we have done for the wealth management products. There also a lot of efficiency has come, operational efficiency, because of which more volumes we are seeing. With more volumes, we will be seeing much better non-interest income coming and accruing in this financial year for us.
Talking about net interest margins, once again, you mentioned that you have taken impact in Q4. I want to understand in FY26, when you're saying that NIMs will be better, can we safely say that the worst is behind us and the trajectory will be, if I can use that term, towards 3% mark in this financial year, if not exact?
Yeah, to explain the net interest margins for us, see, there are two basic components. One is the yield in advances and the other is the cost of deposit. So as far as the yield on advances are concerned, our yield on advances on March 26 is 7.8%, and it has come down by nearly 60 basis point in this financial year. And as far as the cost of deposit is concerned, it is at around 4.8%, and it is quite sticky in this financial year because of the liquidity constraints, and it has come down by only 10 basis point. So, however, the silver lining for us is that the difference between the two is 3% as on 31/3/2026, 7.8 vis-a-vis 4.8. However, again, I would say that we will be doing a lot of strategies to improve the yield on advances, number one. And also quite a few strategies we have already started for reducing this cost of deposit. But to say that the yield, our NIM could be at around 3% for FY27 would be a challenge. I would say a NIM of around, say, 2.7, 2.75, global NIM. That would be the guidance that we would be going.
So that is the realistic guidance which you are giving, but the trajectory is going to improve for sure.
Yeah, definitely. The trajectory will be improving with the geopolitical situation as it is with the West Asia crisis, which we hope that should settle down by Q2 of this financial year, and post that the interest rate should come down and other kinds of things, Brent crude, other things should come down. And with that, we should see the improvements in the margins in the system.
One can also say that this time the bottom line has got some kind of benefit due to lower provisions as well. So how do you see the provisioning part here? And also ECL provisioning has been announced now. What is your strategy there as well?
So as far as the provision is concerned, so when you are seeing that we have reduced our provision on the bad and doubtful debt, it is also because of the fact that our fresh slippages have been quite low. If you see the balance sheet in FY25, we had a fresh slippage of around 7,500 crore, which resulted in that kind of provision in FY25 balance sheet. This year, our fresh slippages are only 5,500 crores. In fact, it has come down by nearly 2,000 crore, because of which there is less requirement of the bad and doubtful provision. That is the realistic figure out there. Apart from that, whatever the provision on the bad and doubtful is there, it is 100% provided as per the RBI IRAC norms. That is one part. As regards the ECL guidelines of RBI concerned, which kicks in on 1st April 2027, there also we have onboarded a vendor. Our teams are already working on it. A lot of work has already started since the draft guidelines have come down. Now that the final guidelines have come down, we were very comfortable with the fact that the impact would be somewhere around 0.5% per annum only on our CRAR. So if you see our CRAR also, it is around 18.01% as on March 20, much above the regulatory requirement of 11.5%. CET1 is also very healthy at more than 15%. So as far as Bank of India is concerned, the transition towards ECL for us will not be any constraint.
Right, you explained about ECL. Now, if you talk about the other constituents like your loan growth, that has been quite healthy this quarter. Which are the pockets or the sectors you're seeing that this loan growth will continue, and how much of the guidance you want to give for FY27?
Yeah, so credit growth, global credit growth has been 15% plus. Domestic credit growth has been a very robust 16% plus. As far as within that segments are concerned, as you asked, so in the RAM segment, we have grown by more than 19% plus, within which we have grown our MSME by 17% plus, agriculture more than 17% plus, and retail by more than 21% plus. In fact, corporate loans also we have grown at double digit, in fact at around 12% plus on a YOY basis. So as far as the guidance for FY27 is concerned, we have given a guidance of around 15 to 16% of corporate credit growth, total global credit growth in FY27.
Definitely. Now talking about deposits, is the repricing completely over?
No, repricing is not completely over. I'll just share a data point with you for our bank. So as far as the retail term deposit is concerned, our average the maturity bucket is around 25 months for the retail term deposit. So the first repo cut from RBI happened, if you remember, in February 2025. So 25 months from that will be ending in February 2027. Right. So there are a lot of deposits in the retail category which are yet to be repriced. So just to give you a sense, we have 2.2 lakh crores of retail term deposit with us. So some major component of that, significant component of that is yet to be repriced. As far as the bulk deposits are concerned, there also our average maturity period for 1 year bulk deposit is around 12 months. So there also some repricing is yet to take place. So that repricing effect is yet to take place, and this is what we are saying, that when we say that our global NIM should be at around 2.7%. So we are also taking into effect that global crisis will ease out, number one, and number two, some repricing benefit we will also get in this financial year 27.
Right. Even the color of deposits have changed. That is not just case of Bank of India, but other banks. And we have seen that retail term deposit growth is there, but as far as CASA is concerned, the degrowth kind of a scenario is continuing. Do you think this trend will continue, or think this year will be slightly changed?
Yeah, so raising of resources is not an issue. Only the price at which it is getting raised is the issue. That is the basic point. So as far as CASA is concerned, see, most of the banks are slowing a flat CASA. So in absolute terms, if you see our bank also, we have grown our CASA book by nearly 20,000 crores. But in terms of percentage, CASA percentage is somewhere around 37% plus for us. However, the retail term deposit is also healthy for us. There we have grown in double digit. So our bulk deposit is only 18%, which means that the remaining 82% is the retail term deposit and the CASA for us. But yes, there is a challenge as far as the raising of resources is concerned, particularly from the CASA side. And we think that this will continue to remain because of some structural issues, because a lot of investment opportunities are there for the savers, our customers. So they can invest in gold, they can invest in equity, they can invest in mutual fund. Real estate is another place where people are investing. So obviously there is a big challenge as far as raising of the resources is concerned. But yes, CASA is a challenge within that, but overall bulk deposit is available. But again, the stickiness of the price is there. If you see the 10-year GSEC is also at a range of 6.9596%. So that also increases the cost of the deposit.
One last question before I let you go. In FY27, from Bank of India, what should shareholders expect?
No, the shareholders can expect a very good, robust growth. As a platform, we are very strong as a franchise on both on the processes, people, and the technology part. And on the guidance side, as I already said, that on the top lines will grow very healthy at 15 to 16% on the credit side, and also 13 to 14% on the deposit side. And apart from that, our operational efficiencies ratios, which are there, they are also looking very good. Already we have touched a ROA of 1% in the Q4. That has been very good. We are giving a guidance of ROA of 1% for FY27. As far as asset quality is concerned, as I already said, that we have come to a very good asset quality with our net NPA at 0.56, gross NPA at 1.98, below 2%. Credit cost is also very low at 0.48%, and our slippage ratio is also, as I said earlier, at a very low number of 0.83% only. So overall, we have a very strong franchise, and definitely FY27 will be equally good as it was FY26.
Thank you so much for taking out time and explaining the numbers. With this, it's over to you, Kavita.